Welcome back to Financial Accounting, Accounts of Single Entry and Incomplete Records. So please, if you're new on this channel, please consider to subscribe and turn notification bell on. So once we upload any new content, you'll be the first person to get it right away on your phone. So continue to subscribe, like, and share. This is Larbi Premium Consult. Thank you for coming or visiting this channel. So let's get on to our topic for today, which is accounts of single entry and incomplete records. So at the end of the day, we expect students or learners to understand these various learning outcomes. So let's see. First, to understand the nature of single entry and incomplete records in relation to small scale business. Then to appreciate the underlying conditions that underpin small scale businesses in adoption of incomplete records. 3, to understand the limitations that incomplete records bring to the forecourt of small firms that do not keep a set of double entry systems of recording. Then 4, to analyze how the net profit is determined from a single entry systems of records and the preparation of final accounts from incomplete records. 5, to understand the preparation of financial statement from incomplete records as a result of stolen goods, cash, theft, and fire outbreak. And lastly, to analyze how the conversion of incomplete records, that is single entry records, to a set of proper records, double entry, is done. So basically, these are learning outcomes that we'll be looking out for in that regard. So let's take note of that. So let's begin with the nature of incomplete records and single entry. In many small-scale businesses, there is a major problem that due to shortage of time and experience, they cannot maintain full set of accounting records under double entry system. That's very true. Because of the shortage of time and because they are the sole person who are actually running the business and they don't have the experience of what it takes to run the double entry systems, there is that kind of difficulties as to how whether they should maintain a full set of accounting records or help them or not. So because they don't have any idea about what we call a double entry system and there is no experience or no knowledge about it, they cannot maintain such records in their operations. Furthermore, they cannot afford to hire outside staff to keep such records for them. Yes, and that's very true. You can clearly see that because of that knowledge you don't have about the double entry system or the full accounting set of records, and because you don't have that resources to actually employ people to run those that system for them, it becomes so difficult because they don't have resources to engage and get qualified people to do that for them. And the basic understanding here is that they don't have any idea, so it will be irrelevant for them to go outside to look for someone to come and run this account system for them because the idea about double entry system is not there. So why then they worry themselves to employ outside staff? So that is what we are trying to talk about. In such a case, a cash book is kept to record cash paid and cash received. So you can clearly see. So because they don't have any set of ideas about how double entry system is run, they will just have their own small notebook that they will call it as cash book. Then anytime there is payment, they record it. Anytime there is a receipt, they record it the same cash book. So going forward, you understand why this system is actually people prefer to run this kind of system than the other double entry that we need to understand in that case. Some traders also keep small notebook to record personal accounts of debtors and creditors. Yes. So for them, because the idea, the underlying principle is don't have any knowledge about a double entry system or of running an organization, they will just use a small notebook to record personal accounts of debtors and creditors, and that'll be all. But however, we are saying that every business needs to know about a trading result. Every business needs to know about a trading result after a specific period of time. So for them, once they think that they have actually been in business for a long period of time, and then it is certain that they need to know how well their business is actually progress and how well it's faring, for them, because they don't have idea about a double entry, they will adopt any method that they think is convenient for them to prepare their profit or loss statement for the period. And once such method is true, they will move along to prepare. So as you are saying, once such method is true, they will go along to prepare their profit or loss statement in that case. So as such, it can be noted that any set of procedures which ascertain the profit or loss of the business and which does not maintain its records and a double entry system, it's possible to use them. That's what we're actually talking about. Then let's see. So all that we are actually trying to talk about here, we have used a term incomplete records or single entry is a term that we have used to describe the above. So where there is no proper set of records that is being kept, and in that those who are engaged in this kind of systems just use, and those who just use this system of running their entry, their systems of what recording, we have used the term incomplete records or single entry to describe that. And because they don't have any idea, and for them, you just keep what a cash book or a small notebook that they think is of good to them, for them to record payments of cash and what receipts, and even some keep other books for personal accounts, and that is we know is very true. So we have used the term incomplete records or single entry to denote such situation once we encounter in that case. So let's take it. So somebody may ask, what is an incomplete record or single entry then? Then what will be your response? Let's see at the actual meaning of incomplete record or a single entry. Incomplete records or a single entry are systems of accounting records kept by organizations which do not conform or adhere to what the double entry system of bookkeeping. And it's very true. Because we are saying that the idea of double entry is not there. And so if nobody, the person who is actually running his own doesn't have any knowledge about double entry system of bookkeeping, any form of system that he undertakes will not adhere, will not comply with the double entry principle. That's why we try to actually denote here. Do not conform or adhere to the double entry. So any system of what entry that the person will adopt in a preparation of the financial statement will actually fall short with respect to the double entry or the golden rule that we all know as a system of what preparation of what the financial statement, or as a basis for preparation of financial statement in that case. So they won't even adhere to the double entry system of bookkeeping, and you can clearly see as we are trying to say here. Thus, only transactions, since transactions are entered once and only personal accounts are maintained, even some keep personal account, even some of them don't even, once they make payments and receipt, don't actually even record it. They just keep those accounts that they think people they might own others, then other others might also want to own them. So once they know those people that own them, and once they also know those that they actually own them, then they keep those records. But for the payments and receipt in terms of their cash or let's say check for them, once the such transaction undertake, that is all. Don't actually make any records for that in that case. So this form of record keeping does not therefore allows for adequate information for required financial, as I was saying. Because you don't have any proper information to make proper preparation of financial statement, it becomes very difficult to have adequate information of a required financial statement. Should in case you want to contract for a loan, then the bank asks what is your financial statement. Then when you are there, you don't have a proper set of what records, so it becomes very difficult for us to get adequate information to grant you whatever you want in that case. So they're adding more information to what we call single entry and computer records. So they are saying that although information provided by single entry system of bookkeeping are incomplete, yet it is still possible to calculate the profit or loss. I think I said this just some few minutes ago. Profit or loss. So this is done. This is how they actually compute their profit or loss statement for the period. They take into account the capital they start with the business, and then compare with the capital they're having at the end. If there is any differences existing between the two, it can be their profit or loss. So when there is a sharp increase with comparing their opening and closing with their capital, then there is a profit. But when there is a decrease, then there is a loss. So that's one thing you also need to understand when it comes to incomplete records and single entry. So in that, I've given some summaries of what the two systems that we actually run, and these are a number of them that we can easily go through and understand them as you move along. And as I said, both aspects of entries may not be recorded, as I was saying. Actually, you have some of them, they won't actually keep any records. They won't keep any records. So you can very difficult. So when you go to them to prepare, they will actually be mentioning figures from their head. Don't have any records, but when it comes double entry, the aspect is actually true. They record everything. And the system of under single entry system, you are saying only personal accounts are maintained by here. Every set of accounts is maintained. You can see personal, real, and nominal accounts. In this system, only debtors and ledger creditors are kept by here. All of them, general ledger, debtors, creditors, all of them actually are kept in that case. And this is the important ratios like gross profit ratio, net profit, and ETs. You have many cannot be computed. But when it comes to double entry, we can compute all these ratios to know how well the business is progressing. When we want to make comparisons with their financial statement, it's likely that some investors may also, let's say, invest in your business, but you don't have these ratios being properly calculated. How can we actually make an investment decision to come to your business and to invest? So, when it comes to double entry, those who run double entry system, we can easily make predictions based on their ratios and whether to know to be part of their business or not in terms of investment activity. So let's take note of that. Then we also have this system is unscientific and does not follow any set of yes, because it's not scientific as compared to the double entry where it's scientific because it follows a systematic what rules and principles that it actually work with. That's a specific set of rules. But when it comes to lastly, when it comes to under single entry, and as system, trial balance cannot be prepared. So mathematical accuracy cannot be checked. Yes, because actually some of them don't keep records at all. So for them, because they don't have the information at hand, it becomes very difficult to extract what trial balance and to even to go along to detect mathematical accuracies. You can't get those information. But when it comes to the double entry, mathematical accuracies can be checked as trial balance is what's available because those who run a set of proper records, we can actually prepare trial balance and then determine errors where possible and check for even accuracies of the information. So these are just an introductory part to incomplete record English. So let's continue. If you have a question, just put in the comment section, then give response to that in that case. So what are some of the conditions that give rise to incomplete records? So what we are trying to say here is that what are some of the motivations or factors that will actually motivate someone to adopt single entry system of what running its business rather than the double entry? That's what we actually want to talk about here. So as said earlier, many small scale do not keep accounts on a double entry. The following reasons underpin their decision. So you see, it was a decision. First, we can say that some sole proprietors have no knowledge in accounting and thus cannot record their transactions and a double entry system. It's very true. As we started earlier on, as I was saying, you don't have any knowledge about how the double entry system is run. So for them, any method that you think it will be suitable for them to work and become so very cost effective, they will actually what adopt and go. Because the knowledge of double entry is not there. So why they worry themselves to actually, so they will actually adopt a single entry system to record their account. So that's one reason they have no knowledge in accounting. And so far as double entry is also concerned. Then two, where the accounts officer is no grant, yeah. May probably we have an account officer, but then he's ignorant, he don't have any knowledge. He's just there wasting the business money and here and there. I mean, the cost that we pay to because you don't have any idea, though he's there, but you don't have any idea about how the system is run, the double entry system. So it becomes very difficult. They can't use any other provider to adopt what the single entry system of recording. So I hope we get what I'm trying to say. So where the accounts officer ignorant to maintain a double entry system of bookkeeping. So for that one, it can also be another factor that may inhibit or give rise to the businessman to adopt what's incomplete record. Then three, we can say that where the business has just commenced operation, Yes, it's so true that once you just commence operation, what is the idea about double entry? You don't have, so you wouldn't worry yourself. Then, where transactions in business are not voluminous enough to engage the service of a capable hands, yes, where the transactions involved are not so large, are not so many, so you don't even bother yourself to go for someone who's very good in actually running this double entry system for you. Then where there is inexperienced accounting staff exists, where inexperienced accounting staff exists too, can also be another factor. Inadequate resource to engage a trained account staff and other aspects that we can also think of. Deliberate attempt to consult business information. All these things are conditions that give rise to incomplete records or single entry. So let's take note of that. Then, what do you think will be some of the limitations or, or disadvantages when you adopt a single entry system of bookkeeping or records? There are a number of limitations that actually could give rise when you adopt a single entry system of what bookkeeping or incomplete records. So these are the limitations. There are difficulties in obtaining reliable, accurate, and up-to-date information. Yes, so there are difficulties in obtaining reliable, accurate, and up-to-date what information for the preparation of financial statements. So it becomes very difficult because you don't have information at hand. So how do you get the reliability? How do you get the accuracy and up-to-date information for the preparation? The information is not there, so even there is no need for reliability, accuracy, and up-to-date information. That is the idea that we need to understand. Two, when it becomes very necessary for the proprietor to negotiate for any credit facility, such as loan, yes. So at times, I think I said this even some the early phase of when we started this. At times, the businessman or the sole person wanted to go for, let's say, some credit facilities like loan to run the business. But then we don't have a set of proper records, set of financial statement that we can actually use to make sure whether your business is so viable that we can actually rely when we make that loan or we lend that loan to you, we can actually pay it back when the time is due. The information is not there, so the viability of a business is at its what lowest. So we can't actually trust your business, how well you can pay our debt to us when it is due. So because of that shortage, because of that short, it becomes very difficult for the person who is running this kind of system to get some support from other sources, all right, to finance its business activity. So the bank is unwilling to grant a loan because the viability of the firm may be doubted as sufficient information. So we are saying that because of the viability of the firm may be doubted as sufficient information concerning the financial state of the business may be lacking. Yes, because you don't have any proper or better information about your business. So how then can we use that as a basis to grant you a loan? So it becomes very difficult for you to quote contract for what a loan because the availability of the business is what it is kind of there's doubt. So we don't actually believe whether we pay you the loan or we give you the loan, we lend you the loan. That's the right word. You're gonna pay us back in future, and even the interest you're going to charge you in that case. So let's take note of that in that regard. Then tax evasion becomes possible. Tax evasion becomes possible because you don't have so tax evasion becomes possible since thorough records concerning the financial status of the business may not be available for computation of income tax. And it's very true, right? So because you don't have a proper financial statement for us to know the profit that the business made in the period, we can we can actually know the quantified amount of tax that we need to tax you. So some of the tax may be what hidden, though you may pay the tax, but you wouldn't be able, or the person who is running this kind of system wouldn't be able to pay what the exact tax to the GRA or those who actually collect the tax collectors. So under this regard, the taxpayers actually who are running this kind of system of their records may actually not pay the right amount of tax that they need to pay, but then some may be what hidden because they don't have proper set of records for us to the tax determine the tax that they need to pay at the end of the day. So that is another limitation of or demerits of single entry system on corporate records. Then it becomes very difficult to estimate the goodwill of the firm. Should the business be sold as a going concern? Yes, because actually you don't have any better information about your business. So if a situation arises and you want to sell out your business and there is a purchaser who is willing to buy, you will come and check that you don't have financial statement. You don't know how well the strengths and the weaknesses of your business are in terms of your financial statement. And once those information are not there, the goodwill of the business cannot be estimated. It will be doubted. I mean, the goodwill of your business will be doubted if you are to sell it and then run by another what person. So because of that doubt, it becomes very difficult to estimate the goodwill of the business. So goodwill actually, we are talking about the reputations, the customer loyalty, and even the location that the business actually cited. And goodwill can also be estimated based on the financial statements that the business actually possesses. If it possesses high liquidity level or other ratios level just of high and good, then we can actually estimate the goodwill. But then if these are lacking, then goodwill fall short. So that is one thing we need to understand too in that regard. They also have capital allowance. Capital allowance may not granted for taxation purpose. Yes, capital allowance in a sense that they are allowance that we give to people who own what depreciable assets, all right, and use it in the production of income and using the production of what income. I mean, they produce goods and services that generates what income for the government to tax. All right. So if one since we don't have proper records, we didn't know the kind of asset that you use to generate income and those you don't use. So in that regard, you won't get capital allowance if you want to come for the authority or the commissioner general to grant you what a tax allowance. Become very difficult. We won't grant you that because you don't have the information that qualifies for you to enjoy capital allowance. So on the side of the one running the single entry system, become very difficult for you to what receive capital allowance as a form of what reducing your tax burden that you need to pay in that case. So that is capital allowance. It's an allowance that is given to what people who own the perishable assets and using the production of goods and services that generates what income. That's what we call by what depreciable capital allowance. Sorry, capital allowance. So we grant to them so that they won't also get out of the business. They can stay in the business for long so that we can the GRA can continue to tax them as and when it becomes so possible in their basis period. So let's take note of that. So these are some of the limitations that comes when we have single entry systems. So first we said reliability, accuracy, and up-to-date information may be lacking. Then availability of a business may be doubted. Then three, we said tax evasion becomes possible. Then it's also very difficult to estimate the goodwill of the business. Then capital allowance may not be granted in that case. So these are the limitations or the merits of a single entry system of bookkeeping. So let's take note of that. So let's move on. So how then do you prepare preparation of the financial account from incomplete records and profit determination? How do you actually undertake those what activity? So we are saying that in determination of the net profit or loss from incomplete records, a statement of what affairs, please take note of this, a statement of affairs similar to the balance sheet is prepared to ascertain the opening and closing capital of the business. So for us to know the net profit or loss, so a statement of affairs similar to the balance sheet, sorry, is prepared to ascertain the opening and closing capital of the business. So after we have used the statement of affairs, we are saying it's similar to balance sheet. After we use that to know the opening and closing capital of the business, we move on to so after the opening and closing capital are ascertained, then the determination of the net profit or loss may follow suit. That's what we are saying. So after you know the opening and the closing capital of the business, then we can actually go on to prepare the profit or loss for the period. But we said earlier on that in determination of profit or loss, we compare the opening capital and then the closing capital. Any difference in the two figures will actually result in a profit or a loss. I think we said this in at the early phase of this discussion. So that is the whole idea. So in determination of what the opening capital and the closing capital. So once the opening and closing capital is determined from a statement of affairs, then we can actually go on to prepare our profit or loss for the period. So let's see how we go by that, and which format guide us in preparation of that in that case. So this is the preparation of final account. As we continue, this is the format for the preparation of the profit or loss statement. You first of all take into account your closing capital. If there was any drawings that occurred during your period, you add back to the drawing, because the drawing should have been part of the closing capital for the period, so you add back. Okay, and if your opening capital exists, you also less that. If it doesn't exist, you prepare a statement of affairs to determine that, so that you less it. So you less your opening capital from the total. Then if along the operation or along your operation, you also came out with additional capital during your operation, you also less those from the summation of the capitals and then the drawings for the period. Okay, so that you get your net profit or loss for the period. So this is the format that we go through. So this is the format that we go through in preparation of the net profit or loss from incomplete records. Okay, your capital, you add drawings, less any opening capital and less any fresh capital, additional capital introduced, then you get your net profit or loss for the period. So let's take note of that. So we continue to look at incomplete records as a result of stolen goods, cash, theft, and fabric. How we also prepare financial statement from these records. So we are saying that where goods, cash are stolen or destroyed by fire or lost in some other ways, the value of such goods or loss stolen must be calculated. So this is what they are saying in simple terms. If we have our records there, but then it wasn't incomplete records, it wasn't what incomplete records, but it was a full set of records. But then a situation happened where some of the goods or some of our records were stolen, was destroyed by fire, right? It becomes what? The remaining information becomes incomplete, right? Because some of them have been what destroyed by fire, or theft has come in, or there's been some fire outbreak, as we are saying. So in that, when that happened, how do you prepare your financial statement in that case? So we are saying that those that has been destroyed by fire or stolen, right, need to be what calculated. And how do you do the calculation? That's why we need to take into account when it comes to stolen goods, cash, theft, and fire outbreak. So let's continue. This is necessary for an insurance claim or for tax purposes. The reason why we need to determine this is for us to know if we insure these items, then we can know how much we can actually claim from the insurance company upon which we insure these items on. I hope that is clear, right? So to determine the goods lost or cash stolen, a statement of stock loss or trading account is what prepared. Please take notes here. For us to determine the goods that is lost or cash stolen, this is what we are saying. You are saying that a statement of what stock loss or trading account is prepared. That one will be for the stolen goods. That's why those ones are in bolding black. For us to determine the stolen goods or goods lost, we prepare a statement of stock loss or trading account to determine that. But for us to know whether there was cash stolen or not, you can also use what we call the cash book to also to determine that. So here, the third point, they are saying that in case of cash stolen or missing, that's where a cash book is prepared in order to what extract the difference. So this is why we are saying if it is for goods stolen, we use what a statement of stock loss or trading account to determine that goods lost or stolen. But then if it's cash stolen or cash missing, we use what the cash book. We prepare a cash book to extract that difference. So when you are preparing the cash book, let me stress more. So once we get there, we can actually move on. When we are preparing the cash book as a result of missing figures or stolen of cash, if the difference results at the debit side, the name that we give to it is an extra receipt from debtors. But if the difference is found at the credit side, then it is called an additional drawings that the proprietor actually made. That is a clue that we actually give when it comes to stolen cash. If the difference at the debit side, then it is if the difference at the debit side, then it is receipt from debtors. But if at the credit side, then it is extra drawings by the owner or the proprietor of the business. So let's take note of that. So this was what I was saying, where the difference on missing items at the credit side. That is, you got it as what cash drawings. You got it as what cash drawings. But however, if it's at the debit side, then you got it was cash received from what debtor. So let's take note of that. Then, as we said that the reason why we need to calculate the value of the item lost or missing is one of the main reasons is to know the amount of the value that we can claim from insurance company should in case we insure those what items. All right, the reason why we do that is to ensure, or the reason why we calculate the value of goods lost or cash stolen is to ensure that if we actually insure these items, especially the goods, we can actually know the compensation that we can claim from the insurance company should in case as a result of, let's say, once we insured it, if we insured it, yes, we can do that calculation and claim from the insurance company. So these are some of the arrangements, accounting arrangement when it comes to some goods lost or destroyed by fire. So let's see, where goods lost or destroyed by fire has not been insured, the following accounting arrangements must be met. So in a case where the goods wasn't not insured, how do you treat it? You're saying that, so where these goods lost or destroyed by fire has not been insured, these are the entries that we need to make. First, you debit the profit and loss account, then you credit the trading account with the cost of goods lost or was stolen. So where it has not been insured, that's how you go by. The cost of goods lost or stolen, you credit the trading account. Here, you credit it so that you to take it from the records that you were having. You take it from it so that you get to know actual records that you're having for the period, actual stock that you're having for the period. So you credit the trading account, then you debit profit or loss. Of course, once it is lost, it becomes an expense to the business. So it must go to the profit and loss account as an expense and you take it from the trading account. B, so that was A. B, where goods lost or destroyed by fire has been insured. So here is a case where it has been insured. How do you actually arrive in your accounting entries? So in that case too, we place much emphasis here. If it has been insured, is it the whole goods that we have insured or some part of it that we have insured? We also need to know this info as to make a better claim if we have insured it. And here too, we are dealing where we have insured it. So if that is true, then we need to know whether all the goods were insured or part of the goods were insured. If all the goods were insured, the treatment will be different. But if part of it was also insured to, then the insurance will also be a different thing altogether. So let's take note of that. So note that the insurance claim may be covered the whole or part of the loss, as I was saying. So where there is a full insurance claim, first you debit the insurance account and you credit the trading account the cost of goods lost. We are debiting them because they have an obligation to actually settle with us. So once you are debiting them, it's more like having a debtor who owns you. If it's a debit side of the debtor, then the debtor own you. So we debit them to tell us they have obligation to pay us for the goods that we have insured that has been destroyed by fire. Okay, then we credit for the trading account to take it off from the stock. Right? Good. But then that is where full insurance claim is, where we make the entries when there's full insurance claim. But then where the insurance claim is paid, how do you also account for that? Where the insurance claim is paid, here we are receiving payment, right? You're receiving money, so we debit our cash book, then we credit the insurance claim account to know that they have paid it. So that claim that we laid where the insurance or in full, where we debited them, we credit it so that it will cancel it off. Please, I guess I'm saying. So once we get that one, then fine, then we are good to go. So we debit our cash, then we credit insurance claim with the insurance or claim what received. So that is the whole idea. So where there is a full insurance claim, this is how it goes, and where payment has been made, your cash book, then you credit the insurance claim in that regard. So let's take note of that. Where the insurance has not been paid at the end of the financial year, we treat the insurance received as what current as. Yes, it's very true. So where, let's say we claim it by making an entry in the insurance account, but they didn't pay for it. It becomes what? Insurance receivables. Insurance receivables here will be more like what? A current asset. They will need to pay, but they didn't pay at the end of the period. So it becomes what? A current asset. However, where the goods loss has been partly insured, the insured part must be treated as in 1B above. So let's see 1B above. So you see where the goods lost or destroyed by fire, where we're having parts of this one. These are going to treat where there is a partly what payment. So you treat them in the same way where we have what full insurance claim and where it is paid. So however, where the goods loss has been partly insured, the insured part must be treated as 1B above, and uninsured you treat it as what? The A. This one you treat it as what? The A. Debit profit or loss and credit it as a normal way to go. So that is the whole deal when it comes to treatment of stolen goods. When it comes to treatment of stolen goods, cash, and then theft. So that is all that we need to understand when it comes to incomplete records. So this is the final word I have for you. Thank you for watching this video. So if you have any question, just comment below in the comment section. I'll give you response. And this is hoping to be the first part of this section. So in the next section, we'll be looking at the practical questions on how we actually determine profit or loss that we have learned from incomplete records, and preparation of financial statement from incomplete records, and how we actually convert incomplete records towards a full set of records. How do you as well prepare those informations? So we are going to go through in that order. We'll be having that one, I think, in 2-part series. We have practice question 1 and practice question 2 to clarify those principles that we have learned in here. So thank you once again for watching this video. If it was helpful to you, please consider to subscribe, like, and share. So I'll see you in this video where we come out with the practical questions about incomplete records and single entry. So thank you for watching and have a nice day. Bye bye.